Today, we're going to talk about entries, and I will share with you my simple 3-step candlestick framework that helped me go from a consistently losing trader to a consistently profitable 6-figure trader. By the way, my name is Sylvia and I've been in the trading game for over 12 years now. But let me tell you, when I first started trading, my charts looked like a complete mess. I had every indicator imaginable on my screen. MACD, Bollinger Bands, Fibonacci levels, RSI, you name it, it was on my screen. But the truth is, I didn't even understand what most of these tools even meant. I just assumed the more I added, the better the confirmation. Like if I just stack enough stuff, I will get the perfect entry. But guess what? That never happened. Instead, I kept second-guessing every single trade and entry. I would ask random traders in chats about my setup, and when I finally felt confident enough to enter, I got stopped out over and over again. I sat there thinking, how come I have all these tools, all that confirmation, and I keep losing money? That's when the doubt really kicked in. I would think maybe I'm missing a secret strategy, or maybe I just need a different indicator, or maybe I just need to start trading different assets and timeframes altogether. Unfortunately, these insecurities led me down a rabbit hole. I bought course after course and joined every single Discord chat I could find. I spent my entire weekends studying charts, while my friends were out there partying and enjoying life. And the result? Losing money, while other traders are making thousands and thousands of dollars per day. I truly felt stupid and lost. I was so close to quitting again. By the way, not the first time I tried to quit trading. Luckily, something shifted during a trip to San Diego. This is when I met the first time my mentor. His success gave me hope. And while we've been sitting on a rooftop bar drinking a glass of whiskey, he looked at me and said, "You are overcomplicating it and I will help you." I decided to give trading one more chance. That's the first time he introduced me to a very simple candlestick framework. I finally started seeing the charts with clarity, and the stuff that I learned I couldn't unsee again. I finally started seeing profits week after week, month after month. And today I will show you the easiest way to master your entries with something I now call the Pitchfork candles. By the way, my mentor became a few years later my husband. Before I show you each step of the Pitchfork framework, I want to share with you some of the mistakes that I've been doing and how I kept messing up my entries, because you might be doing that same mistake without even knowing it. And most importantly, I want to share with you the vital piece of information that I've been completely missing back then. And I promise you, once you see it, you will never be able to unsee it again. So let me show you exactly what I mean. I would open up the chart and I would think this looks like a nice higher highs, higher lows type of a formation. It looks like a flag breakout. And so in this case, I would wait for the price to break this zone and I would enter right here on the long side and I would put my stop loss just underneath. But here's what's gonna happen next. Boom, got stopped out. The market took this low and it looks like the market wants to continue further lower. So at this point, I would think it looks like I'm wrong. Maybe there are more sellers here and I would start looking for some short setups. So because we broke that low right here, I would start looking for the price to come in that breakout area and I would start shorting, trading the breakout retest strategy. And as soon as I see that the price starts going around this breakout zone and one red candlestick, I would enter around this zone on the short side. This would be my entry and my stop loss right above. But here's what's gonna happen next. Boom, got stopped out again. It looks like the market doesn't want to continue further lower, and at this point I would be really frustrated and I would walk away from the screen. A few hours later I will come back just to say this. The market continued further higher, and it looks like I was right on my initial long setup. And I would not understand how come I cannot catch a single move. I would really feel stupid, and I would feel like somebody knows where my stop losses are placed. It can be possible that whenever I enter the trade, the market stops me exactly at that point, and then a few minutes later reverses just in the direction that I thought it is going to go. And that's when I learned about stop hunting. Unfortunately, throughout this time, I've been entering my trades where institutional traders are exiting, and I've been exiting where institutional traders are entering. And stop hunting is when big players push the price slightly lower to stop all the retail traders out, grab the liquidity they need, and execute their own positions. And you can imagine this is well like fishing. They will try to fish here around the next support order and see if there is enough stop orders to get filled so that their long positions can be executed. If there is not enough stop orders there, they will keep looking for liquidity, and the next support zone would be tested, in this case here. When all of these orders are executed, then the price is going to reverse in the other direction. This right here is another example. The price slightly went below that low and immediately reversed to the upside. So what exactly is the three-step candle pitchfork framework? It is a way to enter early before the actual move happens. So instead of waiting for breakouts or thousands of confirmations and entering where institutional traders are exiting, you're going to be entering exactly where institutional traders are entering and where the typical stop loss hunting happens. You will be spotting the exact turning points early on the chart. This will allow you to spot high probability setups with huge reward potential. And that can only happen by understanding the context, the big picture, and the liquidity zones, something that I've been completely missing before. Now let's get into each step. Step number one is identifying the current cycle and bias on the daily chart. Regardless what time frame you're trading, the 1 minute, the 5 minute, the 1 hour chart, we always start with the daily chart first. This top-down approach is going to help us eliminate low quality setups and focus on high quality setups only. It is also going to show us where are the most important liquidity zones and where big players are positioned. I personally used to skip that step a lot in the beginning, and this cost me thousands and thousands of dollars in losses, poor trade management, and chasing setups in the wrong direction. First thing I want to determine is the current cycle. Who is in control, buyers or sellers? In this example, we see here a little bit more sell-off happening. We see a failed breakout, bigger ranges. Look at the size of these candlesticks. It is much bigger than the size of these previous candlesticks. You see also here another failed breakout, and the market reversed immediately to the downside, followed by a huge sell-off swing. This right here is as well increased volume on the red days, indicating that there are more sellers than buyers and more sellers are stepping in. So in a distribution cycle, you can trade in both directions, long or short, depending on where we are at on the chart. So in order for me to determine which direction I'm going to trade, I'm going to draw a box from the swing high to the swing low, just like that. As we can see right here, we're at the lower part of the box, and we see as well a little bit of accumulation happening here. It looks like the market is trying to bounce off this area, and because we're at the lower part of the box, I would prefer to trade to the long side, trying to catch a little bit bigger bounce towards the resistance zone. This right here is the previous breakdown zone and therefore our resistance zone. So my plan is trading from this lower part of the box towards the resistance zone of that box. Now that we know the direction we want to trade, we're going to continue with step number 2, which is finding key liquidity zones we want to trade off. This step is also very important, and I used to skip that at the beginning as well because I saw a pattern formation or some kind of a reversal candle, and I would jump blindly into these setups without knowing that they're meaningless if they're not at the right place on the chart. So on the daily chart, we see here these lows have been tested a few times, and I'm going to draw a line here around this area because these are going to be the zones that I'm interested in. So in case the market goes towards this area, these are the liquidity zones that I'm going to be looking for along, trying to catch a move to the upside into this area right here. That is also the previous resistance zone, and this is where most likely sellers are going to step in and try to push the price lower. So I'm trying to catch one swing towards the resistance zone and be out of the market. I'm not trying to predict any kind of future, what is going to happen after that. Are we going to continue further higher or not? Now let's summarize first. We identified the market cycle and the bias on the daily chart. We drew our liquidity zones on the daily chart. This is where most likely stop hunting is going to happen, and also where smart money is most likely going to step in. Now we can switch on the lower time frame, and for that strategy you can use any time frame: 5-minute, 15-minute chart, 1-hour chart. I personally love the 1-hour chart because it gives me a little bit more time flexibility. Once I open a trade, I can do something else and I don't have to babysit that trade the entire day. Therefore, for this example, I'm going to use the 1-hour chart. So step number 3 is identifying the sucker move and waiting for the pitchfork candlestick formation. Now, what exactly is the sucker move? As the name is already telling you, it's a move that sucks people in just to trigger their stop losses. Take a look at this chart. This is the 1-hour chart on the Nasdaq, and as we can see, this right here was a previous low on this chart, and we saw a big drop straight into this low, slightly went below, and it immediately reversed to the upside. This sucker move typically is 3 to 5 red candlesticks into the support zone, but sometimes it can look a little choppier. It can look like red, green candlestick and slightly drop below the support zone to stop people out so that institutional traders can step in. Now we drew the 2 important liquidity zones on the daily chart. Now that we have that, we're going to wait for the price to drop here into these liquidity zones. So what I want to see typically is 3 to 5 red candles and a reversal candlestick. So here is how the pitchfork candlestick formation looks like. After a bunch of red candlesticks, we're waiting for one first green candlestick. It should have a wick on the bottom in a perfect scenario, and it should close green. So this right here is our lead candlestick. This is typically a red candlestick, and it can also have a wick on the bottom. Then we're looking for one green candlestick with a wick on the bottom, and most importantly, it has to close green. Once the price starts to go above the high of this candlestick, this is my entry on the third candlestick. So I'm not waiting for that second green candlestick to close. I am entering as soon as the price goes above the high of the first green candlestick. And my stop loss is placed slightly below the first green candlestick. Now, because I'm trading here on the 1-hour chart, typically I'm going to put an alarm and I'm going to wait until I get a notification, and if the price reaches one of these areas, I'm going to check on my computer and see if the setup looks good. If you're day trading and you're using the 5-minute chart, you have to wait a couple of minutes after the market opens. That's the perfect time to execute your day trade. Now I'm going to hit the replay button and I'm going to show you a trade that I actually took, and you can see how the execution looks like in real time. As we can see, the market went straight into these liquidity zones. They act as a magnet, and as we can see, it dropped slightly below this previous low just to stop everyone out. And please take a look at the volume here. We see that we have an increased volume on this green candlestick, and we have our first John Wick candlestick. John Wick is in town, and now what we're looking at is I want to wait and see if the price comes above this zone, and this is where I'm going to enter a long position, and my stop loss can be placed slightly underneath. So this is going to be my idea for a trade, and because we're at a very low on the daily chart, we have plenty of room to the upside. Now I'm going to hit the replay button again, and I'm going to place my buy order right here above the high of this John Wick candlestick. The stop loss can be placed just below, and I'm going to observe what is going to happen next. As we can see here, it is not going straight up. Remember, we discussed that we are still in a distribution cycle. Therefore, the market is still a little bit more choppy and volatile, and we have to manage our trades properly. So I'm going to observe here what is going to happen next and leave that trade for a little bit and see if we're going to see some kind of a rejection or a lower low on the 1 hour chart. This is going to be, in this scenario, my exit. So right now the market is trying to reject here at the highs, but not much is happening. And because I don't want to necessarily risk too much, I'm going to move my stop loss right here underneath. The market continues right now further higher, and so I'm out of the risk with this trade. I'm going to wait and see if I see some kind of a lower low or maybe some kind of a rejection before I move my stop loss. Okay, so we see here a little bit of a rejection, and before this drops instantly, I just want to move my stop loss here below the lows of these two candlesticks in case everything accelerates, because again, we're still in a volatile type of a price action, and I just don't want to risk to give back some of my profits. Now I got stopped out for a very nice profit right here. Now I had a pretty good risk versus reward on this trade, and even though the market continues a little higher now, I still feel good about my trade. And I'm going to come back and see if I have another chance to re-enter later. If not, I'm just done for the day. Now, I hope this trade helped you a little bit to see how to enter at the best possible turning point based on the daily key levels and liquidity zones, and how to actually manage your trade properly with trailing your stop as it goes in your direction and not giving back your profits. By the way, if you have not subscribed to our weekly gains guide, it's totally free, and we send each week in-depth analysis and preparation for the week, so feel free to do so. It's right in the description. Thank you so much for watching, and I cannot wait to see you back here on our channel again. Bye for now.